Okay, so when we talk about risk and reward, it all has to do with your comfort, how much money you want to allocate into the specific trade, the position size, and the kind of trading you're doing. Right here, mainly we're talking about day trading currencies. So that's what we will be referring to. But overall, the correct risk-reward ratio when trading is 1 to 4. What that means is you want to risk $1 to make $4, 3, 4, $5, at least $3, $4. So if you are in this particular currency, Bitcoin and dollar, so we are seeing the price seem to have found a base. Now we're looking at the hourly chart simply because it's easier to see. This is something you want to be doing. You want to analyze different charts. So you start with the daily chart to see the pattern, and then you go into the hourly chart to see if you find some consolidation happening, some reversal. Like in this case, we are seeing a reversal here and here. So this is a double bottom, means price is ready to bounce up, and it did. Okay, so we are looking at this area in a downtrend and a breakout right through here. See this black line right here? Price bounced down a support at 5,600 and reverse, moved through the moving averages, pushed through the resistance. This was a key resistance trend line. I don't have the whole chart, but going back was many days of a pullback and then a breakout. A bounce and a breakout. So at the breakout, here is where you want to consider entering a trade, especially since the 50 simple the moving average is holding, price is coming through with volume. This is one of the volumes. Obviously, you want to go inside the 1 minute chart to see the volume that we're talking about. This just makes it easier to see the pattern of consolidation and the areas you want to enter, exit, and calculate the risk and reward. So you enter here at the breakout and you exit somewhere at the resistance. So there is a resistance up here. We see this area right here. Okay, so that's the resistance. So this is a place to exit. And then price consolidate. So let's say you miss this run. You wait for the consolidation. We see price forming this pennant. Okay, everything blinked. All right. So we're seeing this pennant. And this is a place to enter after the breakout. Okay, so now you are waiting for price to break out of the pennant. Here it comes. This is the hour where the breakout occurs with volume. This is the key piece. Pennant formation. Price breaks out of the top of the channel, top of the pennant, and here is the candle. So you can enter anytime during this candle formation. There's volume coming in. So you go inside the 1 minute chart, you see the volume bar popping out of the breakout. And then you go back into the hourly chart. This is 60, that means 60 minutes, that's hourly. So the hourly chart, here it is the breakout. So you should expect a follow-through movement. And then what is the risk and reward? So we said risk-reward 1 to 4 ratio. Okay, so if you're entering at this level, for simplicity, let's call it 6,700. So you enter at 6,700 and you want to risk 1 to make 4. So again, for simplicity, you want to risk $100 to make $400, okay? So if you are entering at 6,700, you wouldn't want price to come down further than $100. So you have $6,800 worth of a coin. I'm just keeping things as simple as possible, even numbers. So you bought at 6,700, one coin, and you don't want to risk more than $100, so it's one ratio. You want to risk $100 to make 400, okay? So if you enter at 6,700, you want to place the stop loss somewhere around 6,600, but you don't want to make that a random choice. You want that stop loss to coincide with a support area, below the support area. So you want to find the support area. So look at the chart and find the support area. In this case, it's the top of this pennant, right through here, at the top of the pennant. So that's support. Price, you don't want price to come back down and go below it, okay? So if you calculate, the area comes around 6600. Look at the area where you entered and look how far down is the support. So if your support is 1 point lower, your reward needs to be 4 points higher. In other words, you're taking a risk of 1 to make 4. In this case, you risk 100 to make 400. So if you're risking 100, you enter at 67, stop loss is 66, target at 7100. If your support is, in this case, $100, or the ratio 1 to 4, if your support is 1 point lower and your reward is 4 points higher, that's a good risk-reward ratio. If your support or price could pull back and you get stopped out, it's at 1. And your reward is 1, don't do it. That's not a good risk-reward ratio. Don't risk 1 to make 1. Don't risk 2 to make 1. Risk 1 to make 4, 5, 10.